how's everybody doing? So I hope everybody's having an awesome week and everybody's getting ready. Everybody's in a festive spirit here. So this is 50 pips rocking and rolling, 21st of December 2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers here on the blog and everywhere else. Understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? Hope everybody's getting all their ready for some time off. Keep in mind that we're going into the holiday season here, so the next couple of weeks we'll have very thin markets. So again, pretty much normal trading on a Monday and Tuesday. Then you're going to have half day trading most equity markets. 25th equity markets are going to be closed. Then the 26th there will be some markets open. So again, we'll see a bit of a holiday chop. Now, I always hesitate about doing this update here going into next week because it's not a proper trading week. We could get some silly moves just because of the lower liquidity. And I know that a lot of people that like me do record weekly updates and stuff. They don't post a video or they don't do an update for these weeks because it's a bit of touch and go. It's not really high odds trading, and it can be a bit funny, but I just wanted to do it anyways because I know a lot of people like it when we do a video. So just keep in mind that there's nothing much on the calendar on Monday. We got trade balance out of New Zealand later on. Then Tuesday is going to be, it's a bank holiday in Japan, but we've got basically a current account data out of the UK. We've got GDP out of Canada. That's going to be interesting. We got core durable goods, final GDP out of the US, and we got some new home sales. So it's going to be a fairly interesting day. Then, as I said, Wednesday half trading day, but we do have unemployment claims out of the US. Most of the European markets are going to be closed, and then Thursday pretty much everybody's closed. But keep in mind, just for funsies, we got Karuta speaking, so BOG on the wires on Thursday, and then on Friday, pretty much everybody's still going to be on holiday. There might be some wheeling and dealing. I'll probably be out. I'll probably be in on Monday, Tuesday, out rest of the week. I might pop in. We still have to do that Q&A webinar for DarwinX, so we'll do it next week or the week after. So if anybody has any preferred dates, don't hesitate to tweet to me or send me a message on the blog letting me know when they prefer it. But I was thinking maybe might just do it, get bored of the holidays, might do it on the 26th or something like that. Anyways, as usual, those guys, if you're subscribed to the blog, it's free. You just get an email update whenever a new blog post is issued. You can do that because at least you'll know when it is if you're not around on Twitter, because I'll do a blog post to alert everybody ahead of time. So looking at the charts, what to focus on? Well, in terms of the markets, the ES, we've been talking about this range here, right? Again, don't anybody telling you this is a completely normal move. This is not a completely normal move, right? But it is what it is. As we like to say, thin liquidity, high liquidity, high volatility, low volatility, because of the Fed, because of Paris Hilton, whatever. If it prints, it's real, right? So if you've got an open position, if it trades there, it's real. So you have to deal with it if you want to trade, if you want to have open positions. So what we're talking about is here, the way this is trading, I guess pretty much everybody's going to be expecting this to break to the upside and try and break the upside in the thin liquidity and print new highs. The only thing I would say is, just be cautious. Don't be, as we like to say, don't be the guy getting to the party when the punch bowl is empty. I really wouldn't be too interested in trying to buy highs. As I said, unless something drastically changes out of the Fed, we'll probably continue to see this kind of buy the dip bid in the market. But I'm much happier, unless you're holding long-term longs, managing some different kind of exposures. But for day trading, I'm much more partial to just playing the range and looking for selective sell opportunities with failures at highs. Or as we said, last time, clearly up here, I'm definitely not looking to trade intraday to the long side, looking for short opportunities. And then, on the way back down, these two moving averages are the key. They're protecting the bottom side of the range, 1975, 1950s. We're expecting it to come back into the zone. Bam. Triggers, and it's still in range. A lot of very nice intraday trading opportunities. Now keep in mind that after, usually what we've seen in the past is the couple of days after the Fed meetings, the moves tend to reverse a bit. So again, I would not be surprised, even though everybody's looking for this to break higher, and I think, I wouldn't be surprised to see it break higher. I also would not be surprised to see a bit of a correction move back down to the mid-range. So again, this is the range I'm looking at. I wouldn't be looking to trade too actively. I'd be very tactical about the opportunities. And I'm just still focused on this range here, okay? What's happening on crude? Again, crude, the weekly close positive here. We have a nice little base that's trying to form. Whether this is the all-time base and we're going to shoot back into the 80s, nobody really knows, right? I don't particularly think this is the complete end of the move. We might have to retest those 55s in some way, shape, or form, but it looks like the bulls are trying here, and we're seeing some covering. But again, even though I think there's some tactical opportunities and there's some interesting opportunities trading inside this 60 55, so again, definitely we said there's interesting long opportunities around that 55. Again, to the long side, to see some pressure off, again, we really need to close back above all these spike highs, and I would say we need to start seeing a daily close back above the 60s. Now, if we see a daily close back above the 60s, then we could see it try to put in a bit more of a relief rally, maybe moving all the way back into the 63s, 65s. But broadly speaking, especially for the holiday chop, I'd be looking at this pretty much being the range that's trying to form for now. So that's what I would be focused on, right? Again, I think ultimately for next year, positions in crude or positions, as I've been talking about, in Russia, something like the RSX are going to be interesting longs for next year, and I'll definitely be looking at that. I do have some exposure on those, so I think those are interesting plays. But again, intraday, you want to be cautious here, trying to ultimately catch the bottom. I think if you're trying to catch the bottom for a longer term position, you should be ready to add your position or look to build, and not necessarily thinking you're going to catch it, right? I would be more selective in the way I look at it, looking at it, planning some kind of a build strategy in there. What else we got? So looking at gold, gold, we're hovering there, and we talked about, we're hovering around this 1200, right? And as we said, 1200, 1250, 1150 to the downside. I don't know where the lines, where our 1150 lines gone, but that's pretty much the range we got here, right? And that's what the market is doing. We've got some downward channel here. It looks like it's trying to put in a stage a little bit of a sloppy relief rally for a move back into those 1250s. So no real change in outlook. Still looking for, it's probably going to be looking at what happens on the equities. The equities are probably going to lead here, and we're kind of bit of a wait and see here. I think you can make a very good case for this going right back down to test those 1150s, or you can make a very good case for this going back to 1250. So the way I'm looking at it is it's still in range, but it looks like it's trying to base for some kind of a move higher. So linked with equities, we might still have to see some downside pressure as the equities test higher before we get that healthy correction. Then we get a move up in gold, but again, pretty much stuck in this range, and a very similar things going on here on silver, right? Where we have this very nice reversal candle here, and we said, this is probably the signal that it's interesting to start to looking to buy some dips for a retracement, a move back into that 18 level, and right here it's just hovering around these 16s. So look for 16s to be pivotal for action inside those 14s, 18s, $2 to the upside, $2 to the downside. Very similar to gold. What's happening on the Forex side? Yeah, some of you guys, a lot of people asking me about swings and stuff. If you're looking for those swingers out there, I'd be for this. This could be an interesting chart. GBP CHF. Especially if we start to get more weakness in the franc. We see GPB catching a bit, and we break above these highs. This could be a very interesting swing for next year. So that's something to keep an eye out for. If you're looking at cable, we keep on talking about these whole 1720s to the upside and 5580s to the downside, and we keep on saying do not be fooled by velocity of move inside this range. Anything can happen in here, and it doesn't really mean a lot until we start to see this weekly close outside and the next weekly follow the close in the same direction. This is just going to be very, very choppy, right? So start to get Momo above 57.20s. Expect this to move back into the 59.50s, 56s possibly, 59.50s, 160s possibly higher. Hold below that 155.80s, then we'd be looking at 52.30s, right? If you look at this on the daily, it really looks like it's trying to base, right? A lot of choppy action, but it really looks like it's trying to base. Those 17.20s keep on getting sold. So that's the key, right? It's very difficult, but to call it unless it starts to close outside this choppy range, but it does look like it's trying to base, and it does look like it wants to try and take a stab at those 57.20s again. Keep in mind we do have data and we've got that thin liquidity, so both sides of this range could be very vulnerable to tests, right? And again, intraday, whatever happens won't mean a lot. It's going to be how we close through this holiday period now, right? What else we got on Kiwi? What's happening on Kiwi? Kiwi, it looks again also that it's holding a bit more of a bid tone compared to Aussie, and it looks like it's trying to base. It's very, very sloppy. There's pressure on that descending trend line, and you know it looks like every move back into those 76.80s keeps on finding buyers, or at least it's struggling to attract new sellers at low. So there's not a lot of change here on this chart. Just look for you know, pressure on as long as we hold below this descending trend line. If we manage to break above, get some daily closes above, then would expect to see those 0.80 level tested. If not, those 76 remains the main base that's trying to form here. No big change there. The other chart which is particularly interesting to me is also the CAD chart, right? And we keep on talking about that 116, how that 116 is really important. You know, and look for this also as crude tries to form a base, and if crude can start to catch a bit of a bid, you know, it's definitely holding. It's struggling to find new buyers at highs after it tried to take out some weak stops and couldn't get any traction there. So again, there's a very strong support resistance there at 1660s that's being defended, and these 116s are pivotal, right? If this starts to get daily closes below, if crude starts to catch a bid, I would not be surprised to see this moving back into the 115 and possibly lower very, very quickly, right? Keep an eye. We've got data too, but those are pretty much the levels I'm focused on CAD this week. And then we've got Euro. Last but not least, we've got Euro. So if we're looking at Euro from a weekly point of view, right? We talked about this weekly chart for a long time, and we said unless we get a close back above those 125s, pressure is on, right? Pressure is on, and pressure is on for that 120 level, right? So here on the weekly, there's very little to say. It's bearish. It tried to pierce back above those 125s, couldn't get any traction, and as long as it's holding below, it's very, very heavy, right? So what this means is that people who are holding shorts have absolutely no reason to cover their shorts. You know, they're going to be very aggressive, and they're going to try and see if they can get more pain to the downside, start to trigger more stops, and the low liquidity try to hit that one, try to cause as much pain to the downside as possible. But clearly, you know, if you're flat, right, the question is, do you really want to start to look to open long positions here, right? Not something I would be particularly interested in. So the way I'm looking at this is all a basing area where I would suspect us to base for then to get some kind of a relief rally, you know, and even off these lows, this could even end up rallying all the way. Just to put it in context, we could easily rally all the way back into the 130s, 131s, and this is still staying pressure on, right? So again, you have a lot of key tests even above that 125. You've got that 127.80s, which is a massive test, so I wouldn't be talking about 131s yet, but keep in mind that there's a lot of room to move up, right? And it's still very, very bearish longer term. So the point is, if you look at it on the that's on the monthly, we're hugging that 200 moving average on the monthly, right? And if you look at the past, if you look at how we traded around this in the past, you know, we didn't bounce off it necessarily all the time. Here we broke below, you know, we traded what was this here? We traded about something like, you know, almost 90, 100 pips below this level, right? Even here we pierced below this level. And so keep in mind that the month is not over, right? That's just a little healthy reminder. At some time during this month, this candle was all the way down here, and it looked uber bearish. You see, when the month closed, it didn't look that bearish, did it? Same thing here. When this candle was down here, it looked uber bearish, but when it closed here, well, maybe not so much. When this one closed here, well, maybe not so much, right? So keep that in mind and look at this. You know, this is a huge support. So even though we might get some wheeling and dealing, you still have to, at least in my opinion, you still have to respect these key supports. The other thing to keep in mind, which is, again, you can make a case for both sides, is one, the shorts wanting to press and having no reason to cover into the end of the year, especially early in the week. And the other, the other thing could also be a lot of shorts are sitting on a lot of profits. They'll want to book their gains, realize those gains before the year end, close the book, square up, and then maybe reshort on the bounce. So again, you can make a case for even seeing shorts covering here or shorts pressing. So it's a very difficult call, and it's all, and also that's why, because that's probably why a lot of people don't do updates or reviews for these last 2 weeks, because it's just anybody's guess. So keep in mind, those are the broader levels, those are the broader ranges, those are the things we're looking at. It's not going to be so much how we trade at that level or a specific level intraday, on the 22nd, 23rd, 24th, 25th, 26th, or whatever, right? It's how we close through these this week and the next week. That's going to be the focus, okay? So I hope you enjoyed the outlook, guys. I'll see you guys for London Open. Have an awesome weekend wherever you may be, whatever you may be doing. Thanks for listening. Take care, guys. Bye.